presentation contains current opinions of Moez Ansari, Chief Investment Officer of Compak Asset Management, a registered investment advisor, and are subject to change. Nothing in this presentation should be considered investment advice. We make no assurance that Mo's opinions or illustrations will accurately predict future prices or financial markets. In no event is past performance a guarantee of future performance. A detailed disclosure can be found at the end of the presentation. And now here's Mo.
Hello everyone and welcome to the Compak Market Wrap YouTube update for July the 8th, 2024. I'm Mo Ansari, President of Compak Asset Management. Thank you for joining me today. First, a reminder, make sure you go to compak.com/media. You can sign up for all of the things that we do here and make sure you subscribe to this. Put a like on the YouTube update so whenever I put out an update, you will be notified, and then you will get the free podcast, the newsletters, and all the events that we do at Compak. So go to compak.com/media. Looking at the numbers, last week, market sort of quiet with the holiday week in between. On July, market was up 1.98%. A great week, up 17.5%. The S&P is for the year. It's been so far a wonderful, wonderful year. This week, it's going to be rather slow, waiting for the CPI and the PPI to come out, the big inflation number. We did get the unemployment data last week, and that was sort of about as expected, but it does show some weakening in the labor market. It does show the unemployment went up to 4.1%, 204,000 jobs created, a little bit more, but it's showing some, it's not the 300, 350, 350, and most of the jobs are government jobs that were created. Looking at the best sector, communication services and technology, both of them up 3.9% for the week. Communication services is also like technology. It's Meta and Google and so on. Energy was the worst one. It had gone up a lot the previous few weeks. Now it's coming back down. Nothing there. Oil also up, but starting to back off a little bit from the highs. It had gone up quite a bit. Looking at the interest rates, that was the big news. They came down from 4.36% for the 10-year down to 4.28%. And that is a good sign. We had gotten above the 50-day moving average, or the 200-day moving average, but nothing dramatic on rates. As long as we are here between 4.7 and 4%, go back and forth, I think we'll be okay and the market can handle that. One of the things that we are seeing, people are saying, why is the unemployment number so low? The problem is we're seeing the working age population is coming down in most of the Western countries. You can see that it's a dramatic decline in Japan, in Italy, in Germany, the number of people that are available to work. The older populations are getting older. I've talked about this over the years, 10, 15 years ago, that we are seeing this demographics where people, just the Western countries, are getting older. The youngest populations are in Africa and Asia. That's where we're seeing most of the growth in population. Looking at this week, the biggest number is going to be the CPI that comes out on the 11th. That's a consumer price index. Then we get the core. And then on the 12th, we get the PPI and the core PPI. Those are the ones that are really going to determine. There was some talk last week that now, because of the unemployment number going up a little bit, it gives the Fed some flexibility maybe to bring rates down at the September meeting. If we do get a lower inflation number, that would be good. The inflation is now the only key left. If we can see inflation continue to trend lower, it might give the Fed some leeway to start bringing rates down, and that would definitely be positive for the market. Looking at the technicals, we continue to move higher. Today is a very quiet day. S&P is just about unchanged for the day, just sitting around. Support is at the 20-day moving average at 54.50, then 53.20 is the 50-day moving average. Looking at the weekly chart, 52.67 is the 20-week. And then we have, this is wave 3, so we are going to see a wave 4 down somewhere, and that'll bring us somewhere to 5,000, somewhere between 48.50 and 42.6. I think the middle is about 5,000. That would be about somewhere around 6-7% pullback. That would be good if we do see that. And I know that would not be, people don't like the markets going down, but that's part of life. Markets do go up and down, but it'll reset everything. Looking at the NASDAQ, it continues to move higher. It's up again today. Not a lot again. Market's waiting for the CPI and the PPI to come out later on this week. But support is at 17,750 and then 17,000 on the daily charts. On the weeklies, Now the target that we've gone through 17.7, we're at 18.3. The market target becomes for the fifth wave up here, which is around 19,400. I don't know if we get there or not. Support is 16.8 or about 17,000, and then 15.2 on the weeklies. Yield, as I mentioned last couple of weeks, we had jumped up. That was putting some pressure. We had popped up a little here. Now we come right back down. The 200-day is 4.36. This morning we are at 4.27, and that's where we're trading. So rate sort of stuck right here in this range. And as long as we are here, which is around 4.6, 4.7 to 4% plus or minus, and we're just going back and forth, up and down, that would be okay. The market can handle that unless we get the Fed coming out and saying that they're going to lower interest rates, and that would be definitely very positive. And we could see, again, I don't think rates will come down. Market is anticipating support is right here, 4.2, then right around 4%. As long as we stay there, I think we'll be okay. Oil, which had ran up quite a bit, came back down a little bit. Support is at 80.60. We're at 82.13 this morning, down about $1 a barrel this morning. So that's good overall. Small caps stuck again in a range 212 to 193. Those are the big range. We need to get out, break out above that, which would be a good sign that we are breaking out, and that would be a broadening of the market. Right now, the market is all tech, all AI. Gold also stuck here between this range and this range. A lot of range-bound trading we were seeing, and that's typical for summer. As long as we don't break down and break out, I think we stay here until July or August. Maybe at the bottom of the range is about 5,000 for the S&P. High is we continue to move higher. 5,600 now seems to be the top so far, but we continue to move new highs. That is my thoughts. Those are my observations for this week. Don't forget to tune in to the podcast, which is going to be a much more detailed view of the market, what happened last week, what to expect this week. Javed and I will be doing that later on today. As long as you're subscribed to it, you can go to that. If you want help with your portfolio, drop us an email at invest@compak.com, invest@compak.com, or better yet, do it the old way. Pick up the phone, give us a call, 800-388-9700. Have a wonderful, wonderful week. I will be back with you next week. Until then, good trading.
This presentation contains the current views and opinions of Moise Ansari, Chief Investment Officer of Compak Asset Management, a registered investment advisor. The views expressed are current only as of the date of this presentation and are subject to change. Nothing in this presentation should be considered investment advice, and nothing is personalized to any investor's individual circumstances. Compak Asset Management offers investment advice only after entering into an investment advisory agreement and gathering client-specific information about goals, objectives, financial status, and risk tolerance. This presentation uses terminology associated with technical analysis and provides charts to illustrate some of the concepts discussed. Technical analysis is a security analysis method with the goal of forecasting the direction of prices of securities or market indices through the study of past market data, primarily price and volume. We make no assurance that past performance or the use of technical analysis will accurately predict future prices. Further, a risk of technical analysis is that overfocus on historical patterns could lead to ignoring or downplaying security-specific concerns, overall market or sector concerns, or other factors because we assume inaccurately that historical patterns will repeat themselves. In no event is past performance a guarantee of future performance.